Society of Amaranthine Educators of Happy Valley Business School presents Talks on Business Essentials. We talk what we know what we talk. Knowledge is cumulative, let us acquire.
Hi. Many youngsters aspire to become entrepreneurs. Some of them even entertaining the fancy idea of dropping out from their studies in the middle and try to pursue the adventurous journey of entrepreneurship. What precautions one should have before they plunge into something without knowing? I wish to tell all young people, please look before you leap. I am not discouraging anybody, but just suggesting people before they take such a life-changing decision. In this episode, we will see the cost of being an entrepreneur. Some of us have to revisit the basics to know the correctness of our decision. Remember, in life, it is always one at the cost of other is a fundamental fact. Nothing comes at free of cost. So, what is the cost of our decision to be an entrepreneur? Do business. Once again, I am telling you, please do business. But do business only when sufficient profit is possible. Let us see this point more closely with great care. Normally, people look at accounting profit. Accounting profit shows the past performance of an organization in business. It shows the surplus created after paying for all necessary expenses or out-of-pocket costs, which are very explicit and recorded in the books of account during the just concluded accounting period. Put it simply, your accounting profit is equal to total revenue minus total cost. Once again, I am telling you, accounting profit is equal to total revenue minus total cost. Assume that an young man, after completing his MBA degree, invested rupees 25 lakhs in some business, or say a departmental store business, and making a profit of rupees 6 lakhs per annum. This profit of 6 lakhs comes as a profit after paying for all explicit costs like payment for all his purchases, labor, EB bill, shop rent and other overhead expenses. He makes a profit of 6 lakhs without doubt. Once again, I am telling you that he is making a profit of rupees 6 lakhs. But the question here is that is he making sufficient profit to justify himself to be in business? Consider the opportunity cost of his choice of being in business. Being an MBA graduate, he would have employed elsewhere easily for a salary of rupees 50,000 per month or rupees 6 lakh per annum, since he is a person with business acumen. Therefore, his salary alone is working out to 6 lakhs per annum, and his capital had been deposited in the bank. This 25 lakhs would have earned another rupees 1.75 lakhs, even at the rate of 7% interest. Put together, his earnings touched 7.75 lakhs through this option. By going for job and depositing the money in the bank, he could have easily made 7.75 lakhs without much of risk. This is his opportunity cost. He suffers a net loss of rupees 1.75 lakhs for his decision to do business. Any resource from the owner which is not paid for constitutes the implicit cost. Indeed, this young man is suffering a loss in the real sense. His business profit is less than the opportunity cost. Now, a shrewd businessman always look at economic profit for decision making. Economic profit is the surplus a business can generate after paying for explicit as well as implicit costs put together, and not just explicit costs alone. Please do remember that economic profit is equal to total revenue minus both explicit costs and implicit costs put together. Do business only when the economic profit is positive. Business decisions should be made on economic profits and not just on accounting profits. Accounting profit is for compliance purposes only. So, dear friends, look at the economic profit of your business and not just the accounting profit. That is all for now. See you again. Bye.